Welcome everyone to today's webinar on age-friendly banking and opportunities for collaboration. Before we start with today's webinar, I wanted to go over a few technical parts of the platform. On the far left of your screen, you'll see the Q&A box. Please enter any content-related questions in there and our team will grab them and have our presenters answer them during the Q&A part of today's presentation. To the right of that pod, you'll see the EFPRN, FAQs, and links pod. There are answers to common questions as well as important resource links in that pod. And to the right of the screen, you'll see the chat box. Feel free to introduce yourselves, where you're calling in from, and if you're calling in from any colleagues within your organization. I will now turn it over to Paul Greenwood, who is our moderator for today.
Thank you so much, Nicole, and hello everybody. Thank you so much for joining us, and thank you for putting your names in the chat box and where you're from and who you're affiliated with. That's so helpful and so encouraging to know that we have a wide variety of participants today, from the West Coast, including California and Oregon, over to the East Coast, including New Jersey and North Carolina, from the top north, Michigan, down to the south with Texas. And then we've got the heartland well represented with Wisconsin, and Michigan, and Kansas, and so on. So thank you all, and welcome to this third of 4 webinars of the Consumer Financial Protection Bureau's Office of Older Americans, which has been entitled Combating Elder Financial Exploitation webinar series for spring 2023. And the final webinar finishes next Thursday, not Wednesday, but Thursday, June the 1st. Today's webinar is Age-Friendly Banking and Opportunities for Collaboration. And during this webinar, we will learn how age-friendly banking initiatives can work with elder fraud prevention and response networks. This webinar will also include discussion of how financial institutions work with their communities to prevent elder fraud, how the Community Reinvestment Act intersects with elder justice, and talking about trusted contacts and a very important emerging topic, which I'm so pleased we're going to discuss, is suspicious activities reports. And because, there's lawyers involved, we always have to have disclaimers, right? So most of this presentation is being made by Consumer Financial Protection Bureau. And from now on, I'm just going to call it CFPB, okay? On behalf of the Bureau, we have 2 representatives. It doesn't constitute legal interpretation, guidance, or advice from the Bureau. And any opinions or views stated by those presenters are their own and may not represent the Bureau's views. The documents include links or references to third-party resources. And those inclusion of links or references does not necessarily reflect the Bureau's endorsement of any third party or the views expressed on that third-party site or the products or services offered on the third-party site. The Bureau has not had the opportunity to vet these third parties, their content, or any products or services they may offer. And remember, there may be other possible entities or resources that are not listed that may also serve your needs. So the CFPB's Office of Older Americans regulates the offering and provision of consumer financial products or services under the federal consumer financial laws to enforce federal consumer financial law fairly and consistently, and to educate and empower consumers making financial decisions. The office also develops initiatives and resources to help protect older consumers from financial harm, help older consumers make sound decisions at key moments in their financial lives, and learn more at consumerfinance.gov/older-Americans. So today we've got distinguished 3 panelists, and myself acting as a moderator. Paul Greenwood is my name. I was a career prosecutor with the San Diego District Attorney's Office for 25 years. And during that time, I had the phenomenal privilege of creating and leading our Elder Abuse Protection Unit. And during that time, I've had the opportunity to meet some stellar professionals in the field of elder protection, including Jennifer Duane, who was appointed to the Bureau in December of 2011, where she serves as the Senior Program Analyst in the Office of Financial Protection of Older Americans. Jennifer leads the Money Smart for Older Adults program, as well as the Elder Fraud Prevention and Response Network program. And prior to joining CFPB, she was the founder and CEO of Elder Financial Protection Network in California. And that's where I first met Jennifer, and together we were able to train bank and credit union employees about how to detect elder financial exploitation in the San Diego area. Along with her is her colleague, Kate Kramer, who is a policy analyst with the Office of Older Americans at CFPB. Her work focuses on age-friendly banking, which is perfect for this webinar, financial technology, elder financial exploitation, and protecting people living in assisted living communities and nursing homes from financial abuse. Before joining the Bureau, Kate worked with older crime victims as the project director of the Elder Rights Center at the Area Agency on Aging of Palm Beach and Treasure Coast. And finally, we are pleased to welcome Janelle Huff, who is the Community Outreach Coordinator for the Bank of the Rockies. Janelle joined that bank in September 2003. She serves as that outreach coordinator and as the coordinator of the bank's financial education efforts. She is the driving force behind their conversations about CONS and Senior Champions programs, which serves to educate staff and the public in all things concerning elder fraud prevention. Bank of the Rockies was awarded top honors in protecting older American category from the American Bankers Association Community Commitment Awards. Janelle continues to expand the bank's network, creatively engages elder justice stakeholders in various manners throughout the year, and by engaging them in mutually beneficial activities. So I think you'll agree, we have brought to you a panel enriched with experience in this area. So just as a recap, today's agenda will cover age-friendly banking, community outreach for elder justice, and reporting elder financial exploitation. Now, before we go to our first presenter, we have a poll, actually two polls that we would like you to start. And Nicole is going to put them up here. You'll see the two there. So could you please describe as best you can your organization? Wow, you're quick. Look at that. And clearly, and it's no surprise, the majority of you, or seems to be, is financial institutions, although others have now overtaken you. So welcome others, as well as APS. Great to have some people from law enforcement and from the payments industry, and even a prosecution person. In fact, I'm going to put my name in there as well, just to add to it. So the second one is, how familiar are you with the phrase and with the concept of trusted contacts? And it's really welcome to see that most of you are not familiar with it. Many of you are, and some of you have familiar and have one. So this is excellent. So for that reason, I think we're going to have a tremendous webinar today. So thank you for that. And now we can turn to, do we have Janelle on the line with us?
Paul, this is Kate. I think I'll be kicking us off.
Okay, very good. Okay, Kate, over to you. Thank you so much.
Thanks so much, Paul. Hi, everyone, and thank you again for joining today's webinar. I'm very happy to be here today with you. Move the slide forward here. There we go. So a significant portion of our office's work focuses on elder financial exploitation, prevention, and response. So it's really exciting to me to see so many of you here in the poll from Adult Protective Services, from financial institutions and payments or other financial services, as well as prosecutors. And since I previously worked for an area agency on aging, I'm very happy to see that there are lots of folks here from the AAAs as well. And you, who are professionals in all of these various disciplines, are in really unique positions to recognize elder financial exploitation and to take action to protect older adults. I was also very excited to see that about half of us are not familiar yet with trusted contacts, because I'm going to touch on that now. So in line with our office's goals of strengthening those age-friendly innovations that are designed to fight elder financial exploitation, our office actually released 2 resources just over a year ago about trusted contact persons. And you can see the link to order here on this page. This project was driven largely by conversations that we had with banks and credit unions who were exploring this practice or who were beginning to implement this emerging practice. And they were telling us that they saw a need for more resources and more consumer education on trusted contacts because people weren't aware of it, weren't aware it existed. If they had heard about it, they weren't sure how it might apply to them or how they might decide on who to choose for that role. So just to give some background, some banks and credit unions, consistent with any applicable laws, now allow account holders to designate a trusted contact person who their staff can contact about specific concerns. And this is a way financial institutions can help consumers to protect their financial well-being. The trusted contact person could be an adult child or a close friend, someone who that person trusts and who the bank or credit union can reach out to for extra help. Now, generally, the financial institution would only reach out to a trusted contact in specific situations. So, for example, a credit union might alert a trusted contact if they can't reach the account holder or they suspect that the account holder is at risk of financial exploitation. And trusted contacts don't have any access to the account holder's money or their financial information. They just get notified if the financial institution has concerns about that account holder's financial safety so that the trusted contact person can step in. Maybe they help connect the account holder with the financial institution to resolve the situation. You can think of them really as an emergency financial contact. And they may be called something like that at a given bank or credit union. They may go by a slightly different name. And we released, as I mentioned, a resource for financial institutions that is designed to provide voluntary suggestions about alerts to trusted contact persons. It also includes information about some of the laws that apply to this practice, which I hope will be helpful for those of you considering whether or how to implement it. And the resource provides information about developing relevant policies and procedures, about educating account holders, and also about training and supporting staff so that they can implement the program effectively. And we'd love to hear from you in the chat or the Q&A about any successes or challenges that you might be experiencing here or ways that CFPB can support related work. In addition to the guide for financial institutions, we also released a guide for consumers that explores how designating a trusted contact can help people to protect their money without giving up control over their finances. As I mentioned, this person doesn't have access to the money, can't transact on the account, but is there to assist in a situation. For example, if that account holder is overseas and can't be reached, if they change their phone number and forget to update it with the bank or credit union, that trusted contact person can connect them in those situations as well. So you can download the guide online or order free print copies of the consumer guide to hand out to your members to help educate them about this topic if you are considering offering the option to choose a trusted contact. I want to move on to another hot topic that seems to be always in discussion, which is transaction holds and disbursement delays. So some states have enacted legislation based on a model act that was adopted by the North American Securities Administrators Association, or NASA. And that model act includes a provision that permits delayed disbursements of funds if a financial institution believes that financial exploitation may occur with accompanying responsibilities. And some of these statutes apply only to broker-dealers or financial advisors or others who deal in securities. But several states have included depository institutions as well, such as banks and credit unions. And in those states where the laws do include depository institutions, these statutes generally provide timelines for the transaction hold. So they may say you can hold a transaction for a certain number of days. They may provide immunity for the financial institution itself, as well as employees who meet the legal requirements. Often that may include reporting suspected financial abuse to specified authorities if they do choose to hold a transaction. So maybe reporting to law enforcement or adult protective services. And state policymakers and key stakeholders in other states are also exploring changes to enable depository institutions to delay disbursements if they suspect that an older account holder has been or will be defrauded. So transaction holds and disbursement delays are other tools that can help financial institutions to prevent and respond to various situations involving elder financial exploitation. So these are only two of the tools available, and our office really believes that older adults need financial services and products that are responsive and relevant to their needs, and in particular, services which can help to prevent financial exploitation. So some examples of these age-friendly practices might include banks and credit unions asking consumers to identify a trusted contact. Other age-friendly practices might be banks and credit unions following state law to place those holds on transactions, or reporting suspected financial abuse as soon as possible to authorities like Adult Protective Services or local law enforcement. Age-friendly innovations could also include protective financial technology, things like automatic transfers or bill pay, automatic alerts for certain types of activity, financial management applications, or other types of personalized reminders and alerts. So these types of interventions can help to prevent financial exploitation and decrease fraud losses that are sustained by consumers. And in order to support financial institutions and other entities in developing age-friendly practices, our office has issued a lot of different reports and recommendations over the years. You can see one of them on the screen here, which are our 2016 recommendations on preventing and responding to elder financial exploitation. So in this resource, we recommended that financial institutions watch out for unusual behavior by their customers, which would include things like using fraud detection software to identify suspicious transactions. We also list several transactional and behavioral red flags of elder financial exploitation. And the resource has information about how to develop, implement, and maintain internal protocols and procedures for protecting account holders, and how to train staff on this topic as well. We released an update to those recommendations in 2019, which is focused more specifically on how financial institutions can best report suspected elder financial abuse to appropriate authorities like APS or law enforcement. This update has an overview of federal and state legislative changes as of 2019. That includes an overview of the Senior Safe Act and charts of state statutes related to mandated reporting of suspected elder financial abuse, as well as a review of state laws on transaction holds or disbursement delays and record sharing with Adult Protective Services and law enforcement when there's an ongoing investigation. We also encourage credit unions and banks to report all cases of suspected elder financial exploitation, consistent with any applicable laws, to relevant federal, state, and local authorities, regardless of whether that reporting is mandatory or voluntary for financial institutions under state law. And we encourage an expedited response if Adult Protective Services or law enforcement or other government entities request documentation related to an active investigation of elder financial exploitation, because often providing those supporting documents can make the difference for an investigator or a prosecutor in being able to pursue the case. So we hope that these recommendations can help banks and credit unions to assess their policies and procedures and to decide whether additional measures might be helpful in better preventing elder fraud. And as Paul mentioned, I just want to reiterate that our Office for Older Americans work focuses on developing policies that empower older consumers to make sound financial decisions as they age. So given this, we have quite a few other free educational resources that are targeted towards adults age 62 and older, as well as financial caregivers or professionals who interact with older adults. And you can find all of that on our website, which will be linked in the chat. As soon as I finish speaking, I'll pop it in there. So I'll now pass it back over to Paul.
Well, thank you so much, Kate, for that useful, very practical information. And I would encourage attendees to post your questions as we go through and hear from each panelist in the Q&A box or in the chat box. We've got people monitoring that, and there will be time allotted for you to have those questions hopefully answered by our panelists before the end of the session.
And thank you, everybody. I am Janelle Huff. I am the coordinator for community outreach at Bank of the Rockies. We are a very small community bank, and I am located in a very small community of about 300 people and located in a tiny community called Clyde Park, Montana. You might be wondering, how did a small community bank such as ours decide to take on such a big, broad, and terrible topic? Well, first of all, I personally witnessed elder exploitation occurring in our own office several years ago within a span of 2 weeks. It was heartbreaking to me. I could not believe it was actually happening in front of our own eyes. And I couldn't believe that it was happening here in my tiny community. And so what I did was I went to my manager at the time and mentioned that there's got to be something we can do. And at the time she said, well, what do you want to do? And I said, I really don't know. Let me think about this. And I came back and I had a few ideas. And I was very fortunate in that she and the bank president allowed me the space and the privilege of tackling this topic and doing it in a way that I felt was the most effective. And I thought we need to start understanding how and why it occurs, and what can we do and how can we do it. And especially for banks, it just seems as if training comes from the top down. And in this case, we really needed to start our training with our front-facing, customer-facing tellers, new accounts representatives, our loan people, and go from there, build on that. That was my big focus. I was also fortunate in that our bank president at the time, well, still our bank president, Mike Grove, understood that this was something that was very important to me. And he personally handed me the CFPB report, Fighting Elder Financial Exploitation Through Community Networks, which, believe it or not, I read from front to back. And I thought, wow, this is fantastic. And we've got to figure out how we can do that here in Montana. But my biggest topic that I want to talk about today is normalizing these conversations. We have got to talk about this. I realized very early on in tackling this very sensitive subject that nobody wanted to talk about it. The abusers didn't want to talk about it, obviously. The victims didn't want to talk about it. And even the banks didn't want to talk about it. And why? Well, we all know about Graham Leach Bliley and financial privacy. But with the support of upper management, of management, and even of my team of senior champions that we grew eventually, we have learned that the more you talk about it, the more normal these conversations are. And normalizing these conversations is imperative. It's absolutely imperative to making sure that we are affecting real change. We also need to grow our circles. And what do I mean by grow your circle? Elder abuse and elder financial exploitation are not just a bank issue. They are not just an adult protective services issue. They are a people issue. And the more that we have talked about this particular issue, the more we have realized that there is a multitude of elder justice agencies, elder justice stakeholders, and a multitude of very out of the box thinking agencies that we can and have engaged. And the more people that are engaged in that circle, the more effective that circle becomes. Implementing the program for me was fairly easy, mostly because I had support from our organizational leadership. And Somebody once asked me, well, how do you build that support? Well, you build that support through success. You build that support by engaging those agencies and effectively and often utilizing those network partners. You build support with success by engagement at all levels of employment. We have a program here called our Senior Champions, and that is a program that is open to every position within the bank. And some of our offices actually boast multiple senior champions. We have some that are lenders. We have some that are managers. We have some like myself, and we have some who are brand new hires and they are just passionate about helping in any way, shape, or form. And communication is also a key to implementing your program. Use your social media platforms. Use your emails to communicate that this is going on, that is going on, that you have an issue going on with a customer, or that there's a customer that you think might be falling victim to a scam or being exploited by a loved one, and let them know, especially in organizations that have multiple offices. That person who doesn't get the answer they want at one branch office is most likely to go to another branch office to see if they can get the issue that they think is an issue resolved and receive the answer that they want. So communicating that is very important. Again, and I know I keep harping on this, but engage your partners. You have to engage like-minded individuals, even if it's the grocery store down the street or the local watering hole where you know a lot of your older customers tend to congregate every day. Those people are valuable resources to have for your partnerships and your network and your circle. And you have to foster and nurture those. You can't just say, hey, do you want to be a part of this? And then exclude them from everything that you're doing and exclude them from the communication. Again, you have to nurture those partnerships and you have to communicate. Getting yourself out there is also very, very important. And for some people, it's very easy. And for others, it's very difficult. But I cannot stress enough how important it is to get yourself out there. Recently, we had a series called Lunch and Learn in March. And if anybody is from Montana, you understand that we have winter 9 months out of the year for the most part. And so one of our sessions had a very small group of people, and we had engaged the Office of Consumer Protection. However, in talking with the Office of Consumer Protection after that small group, what struck me was that we shared the common thought of, if you've reached just one person and that one person is impressed with what they have learned, they will leave your presentation and they will go and talk to 5 more of their friends and their family, and the word will get out. So don't get discouraged if you have small groups, because sometimes those small groups are also more engaged than the larger groups. Being creative in your efforts and your network is very, very important. One of our network partners that I'm very, very pleased to work with, and partly because it does touch me personally, is the Alzheimer's Association here in Montana. Cognitive decline is a major factor in elder abuse. And by engaging the Alzheimer's Association and engaging them in our efforts for bringing awareness to elder abuse and cognitive decline, it's a mutually beneficial partnership. For those of you who have notaries in your offices, partnering with notary associations and your state notary specialist is also very important. We train our notaries how to say no, because as most of us are aware, Some of the scammers and some of the abusers will attempt to use legal documentation such as powers of attorney as a quote unquote legitimized means of perpetrating abuse. The American Foundation for Suicide Prevention is our newest endeavor. We had a senior champion who was very, very closely touched by suicide, and she approached myself and our bank president about engaging with them. And we know that suicidal ideation increased in 2020 across the board, but especially in our older demographics. And social isolation is a major factor for suicidal ideation. And so by partnering with the American Foundation for Suicide Prevention, it gives us another layer of protection and another layer of partnerships that we can use to engage and hopefully prevent abuse in later life. The other thing that you need to do is think big picture and long term. In the previous slide, you saw little people in there in the pictures. We tend to adopt a multi-generational approach. Our thought is that by engaging children at a very young age, and those little feet that you saw were preschool aged, by engaging them in a very young age, we can hopefully get them engaged and I'm sorry for stumbling over my words here, but we can get them to a point where they understand elder abuse and being kind to others at a very young age. The other thing that I would recommend is you have to be flexible. Don't be afraid to make changes as you go. When we first started on this journey, I had a totally different idea of what it was going to look like. Never in my wildest dreams imagining that it would look like it does now. However, I am so incredibly pleased with where we are today, even though we all feel as if we have a lot of work left to do. We also encourage our team to work together, and we play off of each other's strengths, and we are always looking for new and innovative ideas to bring to the table. For example, I told you one of our senior champions brought the American Foundation for Suicide Prevention to the table. Not something anybody else had thought of, but it has turned into something that we really truly believe is something that is going to be mutually beneficial for both us and the American Foundation for Suicide Prevention. Relationship building is so very, very important. If you do not have a good relationship with your powers that be at whatever organization you are working with, or with your network partners or your team members, but especially key is those relationships with your communities. Building trust, especially in a situation where trust has been shattered, is so very, very vital. And so don't be afraid to build those relationships. And like any good relationship, they take work. So understand that it's not going to happen overnight. So a lot of people will say, well, what about CRA credit? I think CRA credit is very important for us as a banking industry, and it encourages commercial banks and savings associates to help the needs of their low to moderate income communities. So if you are thinking about implementing a program such as ours, or if you are thinking of engaging your communities in just any kind of outreach effort for this, it may qualify your institution for CRA credit, but it's always good to check with your compliance officer or your compliance department. The thing about CRA is that it is a nice little cherry on top. We started this program because it was the right thing to do. We did not embark on this specifically for Community Reinvestment Act credit. I think it's very important to understand that CRA credit is nice, and it may or may not qualify. What is most important to us here at Bank of the Rockies is advocating for our vulnerable populations. The awards, the accolades, the recognition, they're all very nice, but they are the positive externalities to doing the right thing in the first place. With that, I'd like to thank everybody for having me, especially the CFPB. And I'd like to turn this back over to Jennifer Duane. Thank you.
Hi, everybody. Thank you for joining today. It's wonderful to see so many from all around the country and so many interdisciplinary folks, lots of financial institution people, etc. So I'm just going to talk a bit about reporting elder financial exploitation with a focus on suspicious activity reports and the like. And so let me forward the slide here. So I wish I had a poll up here on how many of you are aware of or familiar with suspicious activity reports, but it doesn't matter whether you are or you aren't. I'm sure you'll find this interesting. So for those of you who aren't, financial institutions file suspicious activity reports. They're known as SARs, and SARs is plural. So each SAR is individual, but SARs are many of them. And there are many of them filed on a number of different suspicious types of suspicious activities. And elder financial exploitation happens to be one of those that has its own designated reporting checkbox. So these are to report suspected financial crimes in general to the federal government. Filers can indicate in their SAR whether the suspicious activity involves elder financial exploitation. Law enforcement can access SARs and can use the information to conduct investigations and potentially stop elder financial exploitation. In 2020, financial institutions filed over 62,000 SARs involving over $3.4 billion in suspicious activities. That doesn't mean these are confirmed cases or confirmed losses, but that is the total amount that the suspicious activity reports in 2020 totaled. So it validates some other numbers we have, although these are specifically reports by financial institutions. I also want to mention that I just received data this morning, kind of hot off the press, and it's very public, that over 100,000 SARs were filed on elder financial exploitation in 2022. So there was an enormous jump between 2021 and 2022, and we've been looking at the trends for the numbers filed since 2014. And you can find out more about that as we go. So let's see. So banks and credit unions, who are considered depository institutions for the purpose of filing, there's lots of different types of filers, filed more than half of all elder financial exploitation SARs in 2020. And I mentioned the 3.4 billion, and over half of those SARs involved a money transfer or a checking and savings account. Let me move myself forward here. Financial institutions file SARs to report elder financial crimes to the federal government. Filers can indicate in their SARs whether the suspicious activity involves financial exploitation or another topic. And sometimes it crosses over. It can include identity theft, it can include money laundering, it can include a lot of different types of crimes. But if they suspect that an older person is involved, a victim or even a subject has, say, we don't really like the term, but a money mule or another sort of participating, whether voluntarily or involuntarily, they can check the EFE, Elder Financial Exploitation box, and that hopefully will get the attention of law enforcement as law enforcement learns more and more about these reports. So law enforcement only can access SARS and use the information to conduct investigations and, as I said, potentially stop EFE. They can also access the reports proactively, but that's a little bit of a deeper topic. These reports are very, very heavily protected by confidentiality laws, rules under the Bank Secrecy Act. Other financial institution categories or financial service categories include casinos, broker-dealers, insurance companies, mutual funds, futures commissions merchants, and introducing brokers in commodities, loan or finance companies, and housing government-sponsored enterprises. So these are all entities that are covered under the Bank Secrecy Act to file SARS. So going on to data, let's move to the behavioral and red flags. The COVID-19 pandemic exacerbated these vulnerabilities for many older adults, which is probably why we see the jump to over 100,000 SARS filed in 2022. In 2020, financial institutions such as banks, credit unions, and money transmitters filed 62,000 SARS. So that's a big jump in just a couple of years, involving suspected financial exploitation. And that is, we call them EFE SARS. This is the largest year-to-year increase since 2013. And we then have another huge increase that I just mentioned to you for 2022. According to the Federal Trade Commission, older adults now account for 35% of the victims associated with filed fraud reports in cases when a consumer provided an age, which is, I have to explain briefly that the suspicious activity report is really a transactional report. It is not a report of elder abuse, which would go to Adult Protective Services and or law enforcement. This is a report that is filed with the federal government concerning a suspicious transaction. It's generally based on money laundering or illegal transfers of money or illegal use of funds or illegal use of the banking system for no known legitimate business practice or reason. So it gets a little technical, but I just want you to know that these are filed with the United States Treasury under the Financial Crimes Enforcement Network, which is an agency or a bureau within the Treasury. The Bank Secrecy Act is very focused on the Patriot Act, on different types of crimes, including terrorist financing, money laundering for all kinds of purposes. It could involve drugs, it could involve weapons, it could involve, levels of embezzlement. So there's a lot of, the box is 35D, right? So there's at least 35, if not more, categories that can be checked. So this is not a elder financial exploitation reporting mechanism. Specifically, it is actually a federal government way to monitor our banking system, and it involves way more than elder financial exploitation. But we have seen an enormous spike in the number of reports that are only available to law enforcement, and that's where collaboration becomes key. I will continue. The number and patterns for elder financial exploitation SAR filings vary significantly by type of financial institution over time. Depository institutions such as banks and credit unions filed nearly 60% of all EFE SARs in 2020. While the share of these SARs filings by depository institutions has varied over time, the total number of filings by depository institutions has consistently increased from approximately 16,000 in 2014 to 36,000 in 2020. Money service businesses, MSBs as they're known, are historically the second most common type of filer. The dollar amounts involved in the suspicious activity reports in EFE-SARs include actual losses to the older adult or to the filer, unsuccessful attempts to steal the older adult's funds, or both. Because SARs report the amount of risk being lost or an actual loss to an individual or financial institution as reported by the financial institutions, some reports may include uncommon amounts, often in the billions of dollars. This could be the result of an attempt to deposit a fake check, purportedly worth billions of dollars, or attempts to withdraw billions of dollars from a customer's account. EFE-SARs with these large suspicious amounts are actually uncommon. A variety of and sometimes multiple financial products and services and payment methods can be involved in a suspicious transaction. In more than half of the EFE-SARs filed in 2020, a checking or savings account or a money transfer was involved. Cash in the form of U.S. currency was involved in 38% of EFE-SARs that were filed. Checks were involved in 24% of EFE-SARs, and debit cards and credit cards were involved in 17%. So moving on to behavioral and financial red flags. So what we see in the behavioral red flags are, financial institutions are reminded that behavioral red flags of elder financial exploitation and the names of staff who witnessed them should be included in the SAR narrative. So I don't have a mock SAR to put up here, but SARs have a whole bunch of fields in them, and one of which is reporting to law enforcement. And that could also include adult protective services. We did notice in a study we did, and I'll give you links to the study in a bit, that filers, meaning financial institutions or those who are required to file under the Bank Secrecy Act, often, but not often enough, included their cross-reporting to law enforcement and sometimes to adult protective services, which we have heard from investigators, I have specifically, that this is super helpful. So if you're a financial institution and you're filing a SAR, if you have reported to law enforcement, please seriously consider including that in your filing of a SAR. Identification of financial red flags of elder financial exploitation and the associated payments are critical to detecting, preventing, and reporting suspicious activity indicative of of elder financial exploitation in the SAR, indicative of elder financial exploitation. Let's just move forward to reporting actions. Of course, a financial institution is actually required to file a SAR. This is a compliance issue. If it knows, suspects, or has reason to suspect a transaction conducted or attempted by, at, or through the financial institution involves funds derived from illegal activity, or attempts to disguise funds derived from illegal activity. SARs are or the transaction is designed to evade regulations promulgated under the BSA, or lacks a business or apparent lawful purpose, which I did mention earlier, or the transaction involves the use of the financial institution to facilitate criminal activity, including elder financial exploitation. And I just want to mention that one of those criminal activities might actually include tax evasion. How often do financial exploiters report their income from fraud? So tax evasion could be one of those illegal activities above and beyond the impact to the victim and the violation of federal and state laws. So when a financial institution files a SAR, it is required to maintain a copy of the SAR and the original or business record equivalent of any supporting documentation for a period of 5 years from the date of filing the SAR. This is really important. Supporting documentation. I don't see this here in my notes, but supporting documentation can include things like account statements. It could include signature cards. It could include photographic evidence. It could include currency transaction reports, which are also required to be filed by FinCEN if currency transaction is over $10,000. It could involve previous SARs that were filed. Sometimes there are continuing reports as they recognize more and more suspicious transactions. So financial institutions should include any and all available information relating to the account and locations involved in the reported activity, identifying information and descriptions of any legal entities or arrangements involved and associated beneficial owners of these accounts, and any information about related persons or entities involved in the activity. This is really speaking to crime rings. We know that, we have single offenders who are local, who are a caregiver, a family member, or someone like that. Those SARs can be filed also, and we highly encourage financial institutions to file regardless of whether it hits the threshold or not, because if it reaches a $5,000 threshold by a cumulative of, say, $1,000 transactions or whatever it takes to get to 5,000, it is required. However, when we think about low or moderate income individuals or low wealth individuals, losing a little bit is a lot to them. It sometimes has higher impact than it does in the case where somebody has a lot of money, even though the impact emotionally and psychologically is still devastating across the board. We need to have as many filings as possible in order for law enforcement to be able to take action at a local level. And we hope to be talking more about that at a later date in the near future. So moving on, financial institutions should provide any and all information regarding other domestic and foreign financial institutions involved in the activity. Where appropriate, financial institutions should consider filing SARs jointly on shared suspicious activity. So some of what I've been talking about is about crime rings and about foreign frauds and scams. But again, I really want to emphasize that SARs that are filed on local, what I call garden variety, known to the elder types of financial exploitation, whether it's a family member, a contractor, a fiduciary of some sort, could be a power of attorney or someone else. Those are all valuable. They're valuable if at the very least for data collection, but at the most that somebody may or will take action. So we encourage you to consider that if you're a financial institution or other type of filer. So the narrative section of the report is critical to understanding the nature and circumstances of the activity, the suspicious activity, the care in which the narrative is completed. And I'm going to repeat that. The care in which the narrative is completed by the filer may determine whether the described activity and its possible criminal nature are clearly understood by investigators. So quality narratives are extremely important. Filers must provide a clear, complete, and concise description of the activity, including what was unusual or irregular that caused suspicion. And that basically means being a good witness. So as a financial institution, a SAR filer, getting some training around, taking stock. We know that you are trained on taking stock and being a good witness when robberies happen. You have, yardsticks at the door to record their height, and there's certain sort of battery of questions. Think about that in terms of training around filing the narratives for SARs. And I know many of you already do, and I've read many a SAR, and many of you do a really fine job. We need more people to read them, more law enforcement. So financial institutions that suspect elder financial exploitation activities should also mark the checks box for elder financial exploitation. Even if you think it's something else like identity theft or embezzlement or some other crime, you can check multiple boxes. So if you believe that there is an older person involved, because for those of you that don't know SARs well, as I said, the SAR, the filing is transaction specific, and it's also subject specific. Subject is another word for suspect, but what you need to know is that SARs are tips. They're crime tips. They are not a financial institution determining that a crime has taken place. They are basically submitting a tip from a confidential source. So, to the extent that they can be a really good witness and, take note of, who the person is, their demeanor, any sort of specific markings or, anything that is specific that describes the subject who could then become a suspect is extremely important. So detailed narratives are desperately needed in order to really help law enforcement make a case. All right, so we'll move on to SAR filing best practices, and some of this might already be covered. Provide details on the age and location of the target and victim. So financial institutions required to file a SAR if it knows, suspects, or has reason to suspect a transaction conducted or attempted by or at a financial institution, and it involves funds derived from illegal activity. So that's any suspicion can raise this, or attempt to disguise funds derived from illegal activity. I think we kind of went over this a little bit already. Sorry, I am on the wrong slide here. So these are the tips that FinCEN notes that are the best practices in regards to filing SARs for suspected elder financial exploitation and are not regulatory obligations. So providing a statement in the narrative that describes age, location, county, city of the target or victim. Provide details about reporting entity's response, whether the accounts were closed, whether the person was warned that the transactions appeared to involve fraud, if the person was not permitted to conduct new transactions, etc. Details about the amounts involved, whether any amounts were refunded to the older customer or member, in the case of credit unions, as of the submission date of the SAR. And I will mention right now that it's required that the financial institution file a SAR within 30 days of the suspicious transaction. However, we strongly encourage that financial institutions be as proactive as possible and file the SAR as soon as possible, because if you know elder financial exploitation, money moves quickly, and the sooner law enforcement can learn that a SAR has been filed, the better. Referencing supporting documentation, including photos, video footage, signature cards, CTRs, anything else of that sort in the narrative. Cross-reporting the circumstances leading to the filing of the SARs directly to local law enforcement. And that's what I mean by letting law enforcement know as soon as possible. And I'm not going to make any, statements about how exactly you do that, but I think you can contact law enforcement and let them know that you filed a elder financial exploitation report with the federal government. There's no prohibition to talking to law enforcement about a crime. There's no prohibition about talking to law enforcement about filing with the federal government. If they don't know what that means, you can actually refer them to FinCEN's website. And actually, I strongly encourage that financial institutions get together with your local chapters and of your associations, et cetera, with your compliance officers, and figure out how you can work it to inform and build a dialogue with your local law enforcement about what you're filing, and getting them hopefully connected with the local DA's office or your elder justice coordinator in your state, your U.S. Attorney's office. You could report directly there that you filed a SAR, and that way expedite somebody looking into it. We need to build these bridges, and that's what collaboration and networking is all about. We're taking it to a new level here. Provide direct liaisons or points of contact at the reporting entity to relate it to the SAR, so investigators can ask questions and request additional documentation in a timely manner. Timely manner is so important. Take advantage of law enforcement contact field in the SAR to indicate if the suspicious activity was also reported to law enforcement or adult protective services. And please put in the name and phone number of the contact person. I've heard over and over again from law enforcement how important it is for them when they do see a SAR to know who it may have been reported to, and they have the ability to network through the system to find similar circumstances, other victims, the suspect or subject may have, or the crime ring may have hit in a number of places, and SARS can help to connect the dots and bring in different investigators from different places and expedite shutting down crime rings or bringing charges. So expedite responses to law enforcement requests for supporting documentation. That's what I have for now. I know it was a mouthful. It was quite a few mouthfuls for me. I hope it makes sense, but you will have the slides, and stay tuned because we're going to have a lot more on this soon. We do have some great resources. I hope that they are in here. We'll put up some links for you to our, wait a minute, I'm going to just go back to a slide. There it is. There's this slide, Suspicious Activity Reports on Elder Financial Exploitation. It is an analysis of over 180,000 SARs. It was done a few years ago, but it was really interesting, and it talks about trends and issues. And then the FinCEN Advisory on Elder Financial Exploitation. That's very recent. We also have an update and a spotlight on suspicious activity reports. And we also have a document called Fighting Elder Financial Exploitation. And it's a memorandum for law enforcement and financial institutions on collaboration, but it's also a very informative document for adult protective services and other first responders. So with that, I will stop. Thank you so much.
We're going to move to some of your questions, and we thank you for them. And in fact, the three of us, Kate and Jennifer and myself, we're going to all go on camera. So hello, everybody. So we've had questions about the resources available. For example, where can somebody find where there are states where the trusted contact is already being implemented? Kate, can you just sort of comment upon the resources that may be out there and if they're still in the chat box now?
Sure. So I have been trying my best to answer some of the questions by popping links into the chat, but I know one person asked where's the best place to find statutes for your own state. And one great place to start is the U.S. Department of Justice has a big database of elder justice statutes that might help get you going in the right direction. And I put that in the chat. You can also take a look at our office's 2019 recommendations on reporting elder financial exploitation, which does have a review of some state laws with, of course, the caveat that those laws were reviewed as of 2019, and there have definitely been some changes since then. And then in terms of disbursement delays, NASA has a list of the states that have enacted legislation based on their Model Act on their website, which includes disbursement delays for broker-dealers. And unfortunately, I'm not aware of a similar list of state laws on the topic of trusted contacts. But broker-dealers who are FINRA members are also required to ask customers to appoint a trusted contact person under FINRA Rule 4512. So if you're looking in that space, FINRA Rule 4512 might be helpful as well. Hopefully that answered most or all of the questions about that.
Great. And thank you again, Nicole, for posting a lot of these links into the chat box. So feel free to cut and paste those and keep those handy. It's very good. Jennifer, this may be one for you. The SAR. Is the SAR itself considered the actual cross report to law enforcement for EFE, or do banks need to do something separate in addition to filing the SAR with FinCEN?
Great question. And the answer is no, it is not automatically a cross report. FinCEN, the Department of Treasury, requires that all law enforcement entities have or I should say those law enforcement, well, let's just say law enforcement agencies have an MOU, a memorandum of understanding with FinCEN in order to access the database. Now, there are SAR review teams out there. There are other ways to get SARs. This is all a little complicated, but no, it is not automatically a cross report. However, it is our understanding that law enforcement can reach out to the United States Attorney's Office or Elder Justice Coordinator within the U.S. Attorney's Office or a local prosecutor that may have an MOU. You can always ask, meaning the law enforcement can ask. I suppose financial institution could ask as well. I don't see any problem with that. They may or may not tell you, but they should. But my recommendation is that you contact local law enforcement and let them know that you reported to APS and with the federal government. And if they don't know what that means, then you can have a private conversation with them, or you can contact the law enforcement liaison at FinCEN and ask them to speak to your local law enforcement agency about what it means, or ask them to reach out and forward the SAR. I think you can ask them anything. They seem to be very, very helpful, but it is not automatic that local law enforcement will have access to the FinCEN portal database. So being proactive is extremely important under any circumstances, like reporting quickly and cross-reporting to law enforcement and getting that SAR in as quickly as possible.
Thanks. And then along again with the question about SARs, is there a way to know what happens after a financial institution files a SAR, whether or not law enforcement has picked it up, whether they've investigated it, whether they've in fact then presented a case for potential prosecution with the local prosecutor's office? Is there any way of learning the number of cases that are filed with as SARs that end up in the courtroom? Oh, your mic.
Actually, no. SARs are very protected under the Bank Secrecy Act, much like your confidential sources in law enforcement are protected. You don't necessarily say who you heard anything from. Same with Adult Protective Services. You have your sources, you get information. You can't use a SAR as evidence. You can use the supporting documentation as evidence once you have gotten a subpoena. But what it does is the SAR allows law enforcement to get a peek at what's on the table, what the financial institution has reported, to look at the supporting documentation without a subpoena, and then to determine whether, as somebody in the Secret Service told me recently, whether there is a there. And at that point, they can then go and get the subpoena, properly grab the information quickly, but no subpoena is required to look at the SAR or to get the supporting documentation. But that should get the ball rolling as a confidential source. And no, there's no tracking on, how many were downloaded by what agency and what happened in the end. But what we are seeing is these wonderful trends that show from 2014, when something like 16,000 were filed, to now over 100,000 filed. And that means financial institutions are doing the work of reporting and providing supporting documentation and reaching out to law enforcement, but there is a channel and there is some work to be done on the ground to connect those dots and build those bridges. And we're hoping to help facilitate some of that in the near future.
Thank you. For Kate, there's a question which I feel must have come from an APS caseworker asking if there is a standard or a guideline for the information that banks and credit unions should provide to APS. And this person says, sometimes these reports are faxed over with very minimal information on them. Is there some kind of standard or guideline that you can refer them to?
So we touch on this in several of the recommendations that I mentioned earlier that I think have been added to the chat. But I also want to note that there's one other resource that we have that's really focused on how adult protective services and law enforcement can best collaborate effectively with financial institutions in these types of situations. I know time is really often of the essence to prevent additional losses, and it can be really hard to communicate. I think we hear about it from all parties really frequently, and Jennifer can attest to that from her network's work. But we did issue a joint memorandum in 2017 together with Treasury and FinCEN that encouraged coordination among financial institutions, law enforcement, and APS, and has some really good strategies for collaboration on how people can work together to protect older adults from financial abuse. And I know Jennifer already mentioned the Networks program, but I think that is part and parcel of a lot of this, building those relationships and getting a point person to talk to in the local bank branch or higher up in the compliance department maybe can be extremely helpful for elevating these cases and getting a faster response.
Thank you. Kate, there's also a question that's popped up recently about trusted contacts. For example, if an older adult goes into their financial institution and in person and tries to withdraw and does withdraw a large amount of money, which is typically not consistent with their normal pattern of behavior, is this something that you think a financial institution would be wanting to call a trusted contact if that state allows them to?
Yeah, most likely. I think that is likely one of the situations where a credit union or a bank or another type of financial institution would reach out, because that gives the trusted contact person the opportunity to step in and be another voice. Often the teller might be telling that person that they think this is a scam, perhaps. The manager might be telling them that they think this is a scam, perhaps. But hearing that from a trusted person, a loved one who has been designated as a trusted contact can make the difference, or even having that trusted contact person be the one to bring that person in for a face-to-face conversation in a branch, or get others involved who can really assist the person in determining not to move forward. I think absolutely trusted contact can be very helpful in that situation.
Thank you, Jennifer. And this is something you and I have probably talked about a lot in terms of networking. Are there any legal steps that a family member can take to try to get their loved one's hard-earned money back when they discover that this person has sent a prepaid gift card to the scammer?
Boy, these cases are so tough, as you know. The prepaid gift cards are a instrument or a product of choice because they are so easy to pass and they move so quickly. One of the things that one of the parts of the industry we have been working with is payments associations. And it's still, I don't want to get into a big, long description of payments, but payments are basically every way that money moves other than cash, although I think there's probably some exceptions around cash, but it's mostly about electronic payments. It's every check that's written, it's every point of service, it's every credit card charge, it's every kind of money transfer you can think of, from wires to P2P, so they're they're getting increasingly difficult to stop because they move at the speed of light. And a lot of the scammers that use these techniques or instruments, products, are offshore. And once the money is offshore, it's extremely difficult to claw back. But yeah, I'm not absolutely sure what family members can do, but I think that a case that we talked about recently, Paul, involved a situation where an older person used UPS to transfer some funds, and I thought that, obviously the older person was acting independently and wanted to do his own thing, and he probably has a fair amount of capacity. I don't know, where that stood, but he made a decision. He was scammed. He realized it. He told his daughter, and the daughter tried really hard to get information. I mean, she's fairly savvy, and she tried to get information about how that transfer took place. And one thing that didn't happen in a timely fashion, and I'm not going to blame anybody in particular because I don't know the facts, but I think UPS was not notified in a timely manner, and that would have been a good way to potentially stop the transaction. Like, once they knew, that would have been a great place to go with that tracking number and stop that shipment, because I believe that UPS and FedEx and others, but it is all about early intervention that results in loss prevention, and it's not always possible, but truly must move quickly. Everybody must move quickly. The financial institution, the family members, the elder, the neighbor, anybody who, the financial institution, the banker, call the banker and say, stop the transaction as quickly as possible.
Yes, indeed. And thank you, Kate, for actually putting into the chat box a link about, for those who might be interested in how they can help people recover stolen funds. There's a report that was called Recovering from Elder Financial Exploitation. So that link is in the chat box for anyone to cut and paste. I just quickly want to mention one other one. Edward has asked, is anyone aware of any successful class action cases or enforcement actions against financial institutions who fail to stop obvious cases of elder abuse? I can answer that somewhat, in the sense that I know of more and more cases that are being filed civilly by upset victims or their family members. And some cases have been resolved. The problem is they're solved on a confidential agreement. So you never know how they were resolved. But I think you're going to see more and more of these civil cases being filed across the country. And this is why it is so important for financial institutions to become more elder friendly as time goes by and become more efficient in spotting the red flags. If they do their job, then hopefully financial institutions will be able to resist, through defense work, the fact that they did do everything they could to either prevent it or reduce the risk. So we are indeed have run out of time. I want to thank you both, Jennifer, Kate. I want to thank the backroom staff, Nicole, Ben, others. We apologize that Janelle couldn't join us, but I understand that she will have a recording made and you will be able to access that. So all these recordings will be available. And don't forget, there is an upcoming webinar on June the 1st, that's on Thursday, called Financial Giving, from 2 p.m. to 3:15 p.m. Eastern Time, which will discuss long-term services and support, including nursing home debt collections, financial caregiving. Carefully choosing a financial caregiver can help prevent elder financial exploitation. Remember that you can get access to previous and recorded webinars and basically a who's who in elder justice networks. You've got all the resources and contacts there, so please use those resources. And that indeed concludes our training for today. Thank you again for being with us today, and we hope to see you again next Thursday. Thank you.